Hello and good morning. I welcome you to the morning meeting today on Thursday, the 18th of January 2018. This is Jens Klatt speaking and exclusively presenting this format to you for JFD Brokers as their global head of research and education. And yeah, we want to have a look at the developments in the market. It's quite interesting to see that the DAX can still stabilize, let's say, while the Dow Jones was capable of making new all-time highs yesterday. It dropped nearly 400 points on Tuesday, and we all were already, somehow, I think most of us were hoping that finally volatility pick up here. We get to move some more interesting intraday moves than those let's call them one-way streets, which is currently dominating Wall Street. I'm sorry, that's Euro Canadian dollar, but we want to have a look here at the Dow Jones. You can see that here. So stabilizing around 26,100 points, and in fact yesterday making new all-time highs. So not just making back the losses from the day before, but pushing higher than the highest quotes here from Tuesday. So yesterday we traded around 26,131, and so in fact difficult to spot a reason for the run yesterday, or let's say difficult to spot a reason for the push lower on Tuesday, because I mean, we're in a strong uptrend here, and so the Dow Jones in this case pushing higher, making new all-time highs, is more likely than the market reversing aggressively on the downside. So still very elevated level in which we're trading here right now. And in fact, and let's come down to the DAX now. Let's have first of all look here at the hourly chart. So it was in fact very interesting to see that the market yesterday attacked the region around 13,150, 130, 150 points. But holding this level again, stabilizing a little, and then taking off from there. And in combination with the euro showing some weakness then, and pushing towards 122, and slightly below that level, by the way. And we'll have a look at the euro in a few minutes here. In combination with Dow Jones heading higher and euro coming down, we had a very solid market environment in which the DAX was capable of making it back above 13,200 points. And so all in all, it's not very interesting to see the price action here. So it looks in fact very choppy, still very choppy. But short term, I think the level around 13,250 points, the current region around the highs here from yesterday, is quite interesting, I think, because if we make it above that level, there's further room on the upside, which could bring us up to 13,350 points. Well, what we definitely need to see nevertheless is that the Dow Jones will continue its run on the upside, respectively US equities in general, and reaching new all-time highs, while hopefully somehow the euro will probably come down as yesterday. That would make it in fact likely that the market will push towards 13,350 points. In fact, also because there is there are some interesting developments in the at the Eurex here in the options market. So what I'm referring to here is there's a small expiration tomorrow, so it's no big deal in fact, but they're saying that above 13,250 points there could also some hedgers coming into the market. Those market participants right now betting on the gamma. So some of you might be familiar with option price theory here, and knowing about those Greeks. It's delta, gamma, theta, rho, and the vega. And so in fact there's a saying that this is true. Unfortunately, I can't prove it right or wrong. I just give this information here, and in fact, I mean, if you carefully watch this region, you can already see, okay, yes, it seems as if 250 is quite significant, and if we can make it above that level, well, then there's further room on the upside. On the downside, it's similar with 13,200, by the way. So if we push below that level again, 130 to 150 could come into play again. And by the way, not sure whether this will really happen, since right now volatility is not that high, but it's interesting to see that if the market breaks below that level here, there's definitely further room on the downside to 13,000. And this is something you can also see here at the Eurex. I've prepared this already for the German audience here, so you have the chance to check the open interest at their website. And here in this case, the open interest of short puts. And you can see that here, it's most of the time, the main reason is that 13,000 is a round number. And that's one of the reasons why the open interest here on the rate is the usually highest. Nevertheless, it's also showing that it's not just only 13,000 which plays a significant role, probably because you're saying, hey, look at this. I mean, the market here has tested this region several times, so it should be a significant level, but it's more like it's a natural region where you expect demand coming into the market, because those traders here want to defend this level and make sure that their bets here that the market will close above 13,000 points, and not close above that, but trade above 13,000 points tomorrow at the 12 p.m. GMT, when their expiration price or the settlement price will be announced here, that then their bets are not turned sour over the last hours of trading here, but that they can cash in their chips then. And so with this in mind, it's natural to believe that without below 130 to 150 in the DAX, the region around 13,000 could become interesting as a next potential target, which probably could be reached, but not necessarily that the DAX can significantly push below that level. Yeah, and so that's it on the DAX. So in fact, let's just see. So right now somehow looks as if we probably push above 250. Again, it depends on how much momentum we can take on from here. If the market pushes above that level, further room to 350 is given. If we push below 130, 150, then 13,000 could come into play in the next hours of trading, respectively in the afternoon and the evening, then with the US markets open and yeah, probably pushing similar to Tuesday, even though right now it doesn't look that likely if you carefully watch the current price action and the fact that the market obviously does not find any risk aversion drivers anywhere. But the moment the market drops, let's say 400 points, it takes probably 24 hours, and after that we not just made back all the losses, but we made it back to new all-time highs and even higher highs than that. So now let's have a look here at the euro. I think very interesting price action here yesterday in the evening too. Very interesting price action, in fact. So some of you might have seen this. The euro dropped aggressively from nearly 123, where we pushed to which level we pushed to here during the first hours of US equities being open, and then the market sold off sharply and is right now retracing some of these losses, making it back towards nearly 50% corrective correction level here. And I consider it to be really interesting, because I still could imagine that there is another drop towards these lows and below that likely. And the reason I think that is not because there are so many big economic data out there or so, but it's more likely or more like, I mean, we have seen after this push higher from last week Friday especially onwards here, we have seen several ECB officials already coming out and saying something like, well, the euro is at a quite elevated level. We consider this to be a sign of uncertainty. This is an elevated, well, we're not sure whether to end our QE program right at September, probably extending it a little. So all these small tries here to somehow get pressure on the euro here and push it lower before the ECB. And the thing is, that happened so many times over the last years that the market obviously is starting to ignore that. It's only ignoring it, and the market is pushing higher here. And this, what I'd like to bring up here is that I could imagine around the corner, and no one really expects it, an announcement could be made, which will then bring up some new pressure here on the euro with a quite significant try to bring down the value of the currency, since a too elevated level here is a problem for the ECB, something we have definitely to mention here. And nevertheless, the overall mode in the euro is still bullish, even though I somehow think that we are probably about, with this in mind, we are probably about to see a corrective move down towards and below the lows from yesterday, which can be found here around 21.65, and with a push below that level, that we'll at least get to see a test here of this region, of these highs around 20.80, probably slightly lower than that, in the next days. And from a risk reward perspective, I think it's worth to give it a try. So somehow, based on this push lower here and this corrective move, using this as a potential entry point for short engagements in the euro, and aiming for such a push lower, with a stop above the highs from yesterday. Probably the highs, well, by the way, the highs from yesterday are here, so that was in the morning already, when we pushed above 123, and aiming for 128. Nevertheless, you should be aware of the fact that this is an anti-cyclical trade. It's a regressive or a regression trade, which means we are betting that the market will give back some of the pips he made here on his way up in this progressive mood, or in this progressive push. So this is definitely an anti-cyclical trade, even though in the lower time frames it could be interesting to give it a try here and consider short engagements here from the current region. The only problem again is that we are speculating that there's someone coming out with some announcements for whatever reason, respectively, probably some ECB officials already leaked some news for next week, where we already, I think, know that the ECB won't give us any new details on their monetary policy in the next months. So it's not that likely that it is that such a move here, such a leakage would really give us some bigger momentum. But you have to be aware of the fact that right now the economic calendar is really thin. So it's really difficult to see a potential driver here, even though we have to say, the US dollar has seen some really strong moves on the downside. It's very extended on the downside. And the thing is that this looks very, let's say, overdone, especially when looking here at the 10-year yields, which are pushing to the highest levels and above that. After the election here of Donald Trump in November 2016. So what we can definitely see and spot is that this move here higher in yields is not corresponding with risk aversion in the market, which is then more likely to drive equity prices higher, but also probably drive dollar Japanese yen higher. And with this in mind, meaning that the US dollar on a broad scale probably is right now a little oversold, also against the euro, which could then act as a driver here for euro US dollar on the downside, and at least a short-term corrective move down towards 120.80, 121 around the breakout level of last week on Friday. Let's finally have a look here at the Bank of Canada. And their decision yesterday to hike rates by 25 basis points. So as expected, one have to say, in fact, the Canadian dollar didn't react that in either direction, not on the up, not on the downside. It was more like the volatility here caused in this candle, as you can see on the up and on the downside, was more like the drying out liquidity around the BOC and then the US dollar strength in the evening. Which caused probably this wick, respectively shadow here, to occur in this candle from yesterday. It's I'd say the thing is that it's right now a little difficult to really tell in which direction to interpret this rate hike. So therefore, 1 second please, I'll just give you a quote here from yesterday's BOC. So what they said was, So what they said was that some continued monetary policy accommodation will likely be needed to keep the economy operating close to potential inflation on target. So that's very interesting, because it's between the lines you can somehow read that they're saying, well, don't expect us to hike rates in the near term again, and keep on hiking rates here for an extended period of time. So finding ourselves in a rate hike cycle here, a more aggressive one. Not sure why they say that, because, well, somehow to dampen the outlook for the Canadian dollar, which is probably considered a little too strong in the G10 currency universe. Not sure, really not sure why this is, but it's definitely interesting to note here that this was mentioned, and not just mentioned, but it's also interesting to note that it's not interesting to note. It's likely that that was one of the main reasons why CAD couldn't take off yesterday, even though against my interested or the counterparts I'm interested in right here is the Japanese yen and also the Swiss franc. You may remember that next week from Tuesday, respectively Wednesday onwards, there are bullish patterns happening, or we are running into such a bullish seasonal pattern, which is speaking for a CAD yen strength, for example. And in this context, I made this region around 89.30, 89.40 a topic. So in fact, that looks very strong what the Canadian dollar performed against the Japanese yen yesterday. But I have to remind you that it wasn't really CAD strength, but it was more likely Japanese yen weakness into the evening. So yen lost against many counterparts into the evening here. And the main reason, this is the main reason for this candle here, and that's one of the reasons why I'm not overly confident here in buying right here and trying to anticipate big moves in the upcoming days, but want to be patient, still be patient here, probably, especially once the market really decides to probably take another a deep breath, let's say, especially in US equities, and US equities push lower finally, and volatility spikes up, you have to expect Japanese yen to strengthen on a broad scale. So even though right now everything looks not that bullish for Japanese yen, one has to say that all in all, yes, dollar yen is probably pushing higher, targeting 112, probably 112.30. The same is true for other crosses, yen crosses like Aussie yen or Kiwi yen, but also CAD yen, for example. Nevertheless, the moment there is at least a deeper breath in the equity markets, and we get to see corrective move, that should usually result in Japanese yen to strengthen them. And with this in mind, I think we should be really, really careful in being too aggressively long right now with this extended mode, especially in the equity markets. And one of the reasons why I'm still patient, even though everything is set right now. To be honest, CAD yen has a advantage from a yield perspective here. More rate hikes are likely to come, the only thing which I'd really like to see is the Japanese yen probably see another push here lower towards these low, not making it significantly below these lows. Probably there's just a short spike below that, and then somehow try to buy it here with hoping for the seasonal pattern to work out this year too, and pushing CAD yen then higher. And that's it from mine. Happy trading. Watch your stops. Talk to you again tomorrow, 10:30 a.m. GMT with the morning meeting. I definitely look forward to it. Have a nice day. Again, happy trading, and take care. See you, and bye-bye.